Hey everybody, and welcome to today's market structure video. Today's date is June the 18th, 2024, and it is 12:25 p.m. Eastern Standard Time. In front of you will be our risk disclaimer, and what that means is there's risk involved. You should never invest with money you cannot afford to lose. Always keep risk management in mind, and understand we're not CTAs, which stands for Commodity Trading Advisors. And really what that means is what I'm going to share with you is research. What you do, the information will be completely up to you. I'm not a money manager. That means I'm never going to ask for money to trade with. Furthermore, I'm not here to dictate trades or customize trading plans. I'm simply here to share research with you all. So we're going to go ahead and take a look at a symbol here, which is going to be light crude oil, ticker symbol CL. And if we look at our monthly time frame from the big picture, we are seeing that it looks like support held. We're breaking through above a counter trend line after a 2-month low price, pushing up towards a level of resistance. Because of this, we are expecting the market to continue to increase up towards that level right around 82.91, with our overall main objective being right there about 94.20. So for in the interim, we are looking for a short-term push up to right around that 82.91 level. So that's given us our overall direction. Our daily time frame, we are seeing that the market, based upon the information with a Fibonacci established after a movement of downward motion from the market, we're seeing a downtrend, broke through, closed above in the buy zone. The market is currently right now at the 127 Fibonacci extension, and we are expecting it to continue to rally up towards that location, the 61.8% extension. As long as it's above, we are looking to buy upward, and we set our target price right there around 82.55, which if we measure it out is currently right now at the moment around 246 ticks away. So there is a potential 246 tick opportunity at this particular location. So we are still looking to buy. And when we go down to an hourly time frame and break it down, we normally set our Fibonacci right here with a endpoint when we have a new high after a previous 618 was established. It didn't establish here yet. We still got to let the candle form two more. So we have this candle currently active and then one more potential. And if that does form, well, we can use this as a new Fibonacci level with this as our 0% retracement level. Until that's reached, we can use a sub Fibonacci, which is going to be a Fibonacci we started right here at the start of this current trend, which was starting yesterday at 2 a.m. We did the Fibonacci sequence from here to here. Here's my low point and my 0% retracement. And based upon these figures, we can see that right now the market's currently testing, went down to that 382, and is currently testing that 0% retracement. So because of this, this is where I look for either a buy opportunity there or potential down here right around 79.51, which is that listed 23.6% retracement. So based off of this information, I would like to see the market drop a little bit here to reach a level like this and then look for a buying opportunity up towards the 618 Fibonacci extension. If we were to do this, my stop loss would go below the most recent low price, which I'd place right here below the 382. And with that said, this would be how I look for a setup to buy the market to those higher prices. So based off of this, you can enter in now, and there is the potential for 124 ticks of opportunity. However, that also means that there's about 100 ticks of risk at the current location of the market price. I would like to see it drop a little bit down to this green line, because if we do that, our risk becomes substantially lower. It actually cuts it in half to about 42 ticks. And that also means the potential for a reward to that same location is now enhanced, and it's up to 182 ticks. So if you would like to enter now, you can do so with the understanding of the elevated risk. However, I would like to let it drop to a lower price, and then we have our target set up for where we expect it to go based on the Fibonacci mathematical sequence. So here's our setup for the week. For light crude, we are looking for it to increase in price, to go to a higher price. We do have our direction as up. We are in the buy zone, and we are nearing a low price on the hourly chart to look for an opportunity. So if we can get a low price, we will look for a buying opportunity up towards the higher price.